Hey, Brian Steer, Steer Group Real Estate Team here with Doug Miller of Aspire Home Mortgage for another edition of our Mortgage Minute. I was just talking with Doug the other day, and he told me about a new product they have rolling out that's a 101% financing conventional loan. So he's going to take over here and tell us a little bit more about it. Doug?
Thanks, Brian. One of my good investors the other day brought a product to my attention that they've rolled out. They give you a traditional 97% conventional mortgage, and then in addition to that, they will give you what they are calling a community second mortgage for the 3% down payment, and they will also give you an additional 1% to be applied towards your closing costs. So if you have a 97% first mortgage and a 4% community second mortgage, that equates to 101% financing on a conventional loan.
So in essence, you're financing 97%, and then they're giving you a second loan for your down payment and a little bit of your closing costs.
That is correct.
And what if you wanted to wrap, like a lot of people do now, wrap all your closing costs in the loan? Can you do that still?
Yes, you can. You can piggyback the loan with your traditional seller second or seller assist closing costs. So we can figure out for you what your total closing costs are going to be. We can back out to 1%, and then we can give you advice on what the number needs to be to incorporate all the closing costs into the deal.
Gotcha. Okay. So in essence, it's a zero down loan where they're allowing you to finance the down payment, and you can do the 1% of the closing costs or the entirety if you want to.
Correct.
Got it. Is there a credit score requirement?
There is. The credit score requirement is 660.
Okay, so 660. So slightly more, a little bit more than products like USDA, but this is a conventional product versus
a
government
correct.
product. So it's going to have its advantages in that regard. Got it.
Mm-hmm.
Anything else important you think we should know about the loan?
The community second is an interest-only loan. So the term matches the term on the first mortgage. So if you get a 30-year first mortgage, the community second will also be for 30 years. It's interest-only payments, and the interest rate also matches the rate on the first mortgage. So if you got a 4% first mortgage, the second will also be at 4%.
Can you pay that loan off early without penalty?
Correct. You can pay the loan off early without penalty like any other traditional loan.
Gotcha. Okay, so if you wanted to get rid of that piece of the loan that's the down payment and the closing costs, you could go ahead and pay that off way ahead of the 30 years and just be in your traditional conventional mortgage with your normal interest rate.
Yes.
Got it. Cool. Well, it sounds like it could be a good loan for a lot of people out there, especially in this area. If you're looking to get into something without a lot of cash in your pocket, you have a good income, but maybe you don't have a lot of cash saved because of college or whatever you had going on. Could be a product for you, so if you think it could work for you, if you have any questions, go ahead and drop us a message and we'll get back to you, or feel free to reach out to one of us. We'll go ahead and put the phone numbers in the link. Thanks for watching, guys. This is your Mortgage Minute for this month, and we'll catch you on the next one.